What's going on, guys? My name is Brooks Beard, and I'm a mortgage loan officer with Geneva Financial. And thank you for tuning in to my home ownership training. And I want to share with you guys the 6-step roadmap to getting pre-approved and closing on your first or second home. And just to give you a little bit of background about myself, I've been in the mortgage industry for about 7 years now. Prior to that, I was a financial advisor for 4 years. And so I've been in the financial industry for a little over 12 years now. And I've pretty much helped over 1,500 people either purchase or refinance a home. And that's anywhere from business owners, teachers, dentists, firefighters, military, nurses, attorneys, doctors, you name it. I've worked with. So I want to definitely share with you guys the mortgage process, so you have an idea through your home ownership journey exactly what to do. All right, so the first step you guys want to do before you go talk to a realtor or anything like that, you want to get pre-approved. Okay, so that's step one. You want to get pre-approved, and I want to kind of go over with you the pre-approval process. So basically, it's either going to be something that you apply online to, or you call and talk to a loan officer, and they're going to collect some information, okay, to get you pre-approved. And some of the main things that they're looking for is your personal information, such as your date of birth, social, name, email, phone number, the standard information, okay. Also, they will have to pull your credit. All right. So typically what most lenders look for is if you're doing one of the government programs like FHA, USDA, VA, the minimum credit score is a 580. Now, some lenders will require 600, some will require 620. So it just depends on the lender. And for conventional, it's 620. Okay. And if you guys are looking to remove any type of negative items from your credit report, such as collections, charge-offs, and any other negative item, go to thinkandbank.com/fixmycredit and get access to the 609 dispute letters. These letters are proven to remove negative items from your credit report. Okay. The next thing during the pre-approval process that your lender will look at is your income. And it's something called debt to income ratios that they will look at. And the debt to income ratio needs to be anywhere between, depending on the program, 41 to 45%. They will also look at your assets. And typically they want to see the last 2 months bank statements to confirm that you have at least 2 months reserves. Now, some programs don't require reserves. Under conventional loans, they do. They also want to see if you have money for your down payment and closing costs. Okay, and then once you go through that entire pre-approval process, the lender will submit your loan file through what you call an underwriting system, and then it will basically give information back to see if you've been pre-approved or not. Okay. And once you have been pre-approved, okay, and the loan officer sends you that letter, then at that point you can go ahead and go to step 2, which is contract with the realtor. And you will supply the realtor your pre-approval letter. And this is kind of where the fun starts, right? You give them the letter, you guys start searching for homes. They're going to ask you some probing questions to get an idea of what you're looking for in a home, so on and so forth. Once you find that perfect home, the realtor will start to negotiate on your behalf to make an offer. All right. Once you guys make an offer on the home that you like, then at that point, the realtor will send over the executed contract to the mortgage loan officer. Okay. All right. So at that point, once the loan officer gets the contract, you want to be thinking about the documents you're going to need to provide to that loan officer. And I tell people all the time, you need to have these documents within 24 to 40 hours. It's going to really help speed up the process for you. Okay. And here are some of the documents that you will potentially need. Okay. For a W-2 salary hourly individual, the last 2 years W-2s, your most recent 30 days of pay stubs, your last 2 months bank statements, and a copy of your driver's license. Now, in some cases, even though you're W-2 employee, some lenders may still need tax returns. And it just depends on if you're commission based and how much of that is commission, so on and so forth. And then also for self-employed borrowers, typically lenders need the last 2 years tax returns, all pages and schedules signed and dated, a profit and loss statement and balance sheet. Now, depending on how your business is structured, you may not need a balance sheet. If you're just a Schedule C, if everything just flows to your Schedule C and you're a sole proprietor, they just may need a profit and loss statement. Okay. Now, if you're S corp, C corp, things of that nature, they will probably need profit and loss statement and balance sheet. Now, same thing applies with the pay stub. If you're S or C corporation and you pay yourself a salary and you also provide yourself pay stubs, you may need to supply that as well. Now, some companies don't pay themselves in that manner, so you don't need to supply any pay stubs. Okay. Also, 2 months bank statements, a copy of your driver's license. Okay. All right. So once you provide all your documents, you submit everything, your file will be assigned a loan processor. Okay. And the loan processor will be responsible for basically getting all the supporting documents into the file, like your W-2s, tax return, we just discussed. They will also send you the loan disclosures that you would need to sign, date, and send back. Typically, you can do e-signatures where you do everything online, or you can do it by mail as well. The processor will also get letters of explanation if that's needed. For example, if you have any large deposits that you've deposited into your account that may need an explanation for, any inquiries within the last 120 days, the underwriters just want to make sure that there's you've opened a new account and that's been factored into your debt to income ratio. But again, things of that nature. Okay. The processor will also be responsible for ordering the appraisal, the title work, verifications of employment, etc. Okay, and during this stage, you want to start thinking about who you're going to get for your homeowners insurance. Okay, you also want to start thinking about getting a pest and home inspection, and your realtor will kind of go over that information with you, but those things are important as well. Okay, and then once we have all this information, the processor will prepare your file to be sent to the underwriter. Okay, so once they get all of your supporting docs, your W-2s, tax returns, pay stubs, bank statements, they'll prepare the file to be sent over to the underwriter. All right. Now, step 4, the underwriter review. Now, once the underwriter gets the file, they will review all the information that the loan processor submitted. Okay, and they'll look at your income, they'll look at your assets, they'll look at your credit. Okay, and to confirm that you meet all the guidelines for whatever particular mortgage product you're applying for. Once the underwriter reviews everything, okay, they're going to issue a conditional approval. If everything matches up, everything looks good. And then once the conditional approval is supplied, then basically what happens, the reason they say conditional approval is because you still have to get title, appraisal, all that stuff done. Okay, those are conditional items that will be needed to go to closing. Okay, and then once those items are done, we get clear to close. Okay, then we can go ahead and start to schedule your closing. Okay, now remember, I tell clients all the time, once the lender gets your file approved, okay, and it goes to the underwriter, there still may be items that maybe the underwriter needs to clarify. So just be aware, even though you submitted those W-2s, pay stubs, all those upfront documents, there still may be additional items needed. All right, perfect. So once we get you final approved, everything has been final approved. Step 5 is to basically go to pre-closing. And basically what happens in pre-closing is you will be assigned a closing coordinator. Okay, the closing coordinator will reach out to you to confirm when you want to close and to schedule your closing. And they will coordinate with your realtor, the title company, the closing attorneys, etc. Okay. Also, you will conduct a final walkthrough, okay, to confirm the house is up to standard, so on and so forth, a few days before closing, right? Then the final thing is closing. Okay, that's where you go to the title company's office or the attorney's office and conduct your closing. You sign all your documents, so on and so forth. Now, keep in mind when you go to closing, for if you have to for your closing costs, down payment, so on and so forth. You will need to supply a cashier's check, or you can do a wire. And typically, they will want you to wire the funds 24 to 48 hours prior to closing to make sure the funds are there and there's no issues. Okay, and again, once everything is signed, you will get your keys. Okay, now I want to go over with you as well the absolute don'ts in regards to the home buying process. Okay, so the first thing is don't make any major purchases during this process, like buying a car, opening a new credit card. Okay, because if you do, and depending on if your debt to income ratio is kind of tight, it could throw your ratios out of whack, and then at that point you may not qualify anymore. Okay, I also tell individuals, don't send more documentation than what the lender asked for. Okay, just send what they ask for. Don't send no more, no less. Okay, and also don't go house shopping until you've been pre-approved. And I kind of established that at the beginning. You want to get pre-approved first before you even reach out to your realtor. Get pre-approved. Know what you're comfortable with as far as payment wise and what you're qualified for. Don't be slow to respond to your mortgage loan officer or processor. Okay, you wanna act quickly. The quicker you act in regards to sending documents in, so on and so forth, the easier your file will go through the process. Okay. Also, you don't want to make any large cash deposits, because the underwriter is going to ask you to explain any type of large deposits that's in your checking or savings, whatever the case may be. They're going to ask you to explain it. Okay, so the less steps, the better. Okay, and again, don't be surprised if the underwriter asks for additional documentation. Okay, again, we are responsible for getting all the upfront documents, your W-2s, pay stubs, tax returns, and then once it's processed with the loan processor and it's sent to the underwriter, and they review everything, they may have some questions. Okay, so just be aware that there may be additional documentation, and then lastly, I always tell you, watch the advice you get from non-mortgage professionals, right? If you want to get some information, at least ask someone in the field. That way you get more of a professional, some professional advice. All right, and I'm gonna leave it there with that. So, guys, if you want to go ahead and get pre-approved today, click the link below. You can you get access to my website to where you can go online, fill out all the information, and see if we can get pre-approved today. All right. Or if you want, you can also schedule a home ownership strategy call with myself. Okay, and we can kind of go over all of your home ownership goals and see if we can get you pre-qualified. So again, both links are below. Click that information. Thank you again for tuning in to this home ownership training. And again, I will see you guys on the other side. Take care.